Welcome to Steve Couper's podcast. This is where we bridge the gap between aspiring real estate investors and accredited or high net worth individuals and professionals. So whether you're looking to grow your wealth passively or learn how successful investors structure deals, you are in the right place. I'm your host, Steve Couper. Let's dive in.
Good morning. How you doing?
Hello, Calvin. How are you?
Doing fantastic. How's your morning treating you?
Very well, thank you. Very well indeed.
That's good to hear.
Hey everybody, welcome to Steve Couper's podcast. Today, I am really excited to be able to spend a bit of time with my friend Calvin Hexter. He's the founder of Calvin Realty out in Edmonton, Alberta, an associate part of EXP Realty, I believe still, specializes in investment properties, multifamily, recreational, and residential. There's something I found on your site that I think is really quite an interesting way to start this off. You got to quote progress. If there's one word that you try to embody in every facet of life, it's progress. And let's make sure we include that in the conversation today, Calvin.
That was fantastic.
Awesome.
Thank you.
Awesome. Well, why don't you tell us a little bit more about yourself? I don't know much about your background. Let's start diving in.
Okay, sure. Yeah, you know what? I started in the fitness industry naturally right out of went to get my diploma after high school in fitness. Knew I didn't want a desk job. I needed something more dynamic. I needed to be energized, and so I thought like fitness was a great avenue, especially because I loved helping people. I got a lot of, I knew early on most of my fulfillment bucket would get full based on the amount of impact I could make with one or numerous individuals or a group in any given day. And so that led me into fitness. And I quickly went into a regional manager role, which I held for about 12 years in one of the premier health clubs here in Alberta. And, 5 or 6 years in, my goal with fitness was to also allow myself to use as an avenue that could get me to another financial goal. And I quickly realized with the route that I took, I had a ceiling. I had this glass ceiling, and I hit kind of the peak of my income, 5 years in within this company. And now this day and age with apps and everything else like that, you can make endless money with, I think, almost anything that you can do. But back then it didn't really seem like there was much of an avenue for it. So, I'd dabble in stocks on the side. I would dabble in mutual funds, and I'd lose a bunch of money in stocks. And my mutual funds would go up extraordinarily slow, like a snail pace. And I was like, I'm never going to get to where I want to go. Because growing up, I never had, the luxuries of like going to Disneyland or doing anything that was kind of outside of Canada. It was just like little local trips, which was fantastic. My parents are some of the best, people on this planet, and just financially we weren't there. And so I knew I wanted to provide something extra. Fitness wasn't going to do it. So I started dabbling in things on the side, like a lot of people do. You'll dabble in things hoping that you can make up and supplement, to either build a legacy, create more freedom. And one day I had a call from my good friend Jaden, and he said, I bought my neighbor's property, and he was living in a property, he owned it, and he bought his neighbor's property. And I was confused of why he did that. And so I asked him, and at that point, I think I was 22. So naturally you think, is this like, are we doing like a frat? Is this like a weekend house that we all gather at, have fun? And then you go back to reality Monday. But then this is, is that the pad? And he's like, no, we're going to put tenants in it, rent it out for $2,300 a month. All expenses are about $1,850. So I'm cash flowing, I'm cash flowing a decent amount every single month. And I was looking at it and I was like, wow. I'm like, you're making around like $350 a month minimum. And that's way more than I'm doing. I'm losing like $350 a week in stocks. And I like the idea of being able to see my asset. And then later, through further investigation, I realized, there was actually like mortgage pay down. There's tax benefits to it. And properties do appreciate. And I came from a background of knowing nothing in real estate. No family members were realtors. How like everybody knows a realtor, everybody knows a DJ. I knew lots of DJs, but I didn't know any realtors. And I didn't have any family members that invested in real estate. So I didn't really know that there was this world out there. And I didn't understand what property management was. I was like, why would people need to manage properties? So I literally came from probably 6 feet. I'm going to say 6 miles behind most people in this race of real estate and getting into it. And so, I quickly learned, and I realized that real estate is a really good vehicle that most people can use in one facet or another to achieve their financial goals. And so I made a goal that year to purchase a property outside of my primary residence, which we did off market. and I made every single mistake in the book. Every single mistake that you could make when purchasing a property and doing a BRRRR, which I didn't realize I did a BRRRR until 3 years after I did the BRRRR. I realized I made every mistake. So I overpaid for the property. I didn't pull comps when I was purchasing it. My neighbor simply said, hey, I'd be looking at selling. I want to sell for, at that point, it was three. And again, we're Edmonton prices, right? So when you compare it to Abbotsford or Burnaby or Coquitlam or even Vancouver, considerable difference in pricing. So at that point, he wanted 380. I negotiated him down to like 368. And I was like, yeah, I'm the best rock star ever, because I didn't know how pricing went with real estate, right? I just felt like it's kind of like you go to Best Buy, you see a set of speakers for $1,000, you get it for $850, you feel like the winner, right? That's how I felt. I felt like a winner. And then I realized I overpaid by like probably $15,000 on the property afterwards because I didn't pull comps. I didn't get any professional advice. And then when I was doing the BRRRR, I would go to Home Depot and I would get like the fancy toilet, the one that had the seat move up and down, because I was like, oh, that'll be nice. They'll appreciate that. And then I realized that you needed to get electrical for it, and that these services like seat automation need to get serviced by an electrician. So now I purchased something that is creating greater maintenance and expenses on a monthly basis, eating into my cash flow. That's just one of many examples of the mistakes I made. Overspent on the renovations, renovated the main floor, didn't tenant the main floor until I finished the basement. I should have done that, offered a discounted rent to at least subsidize the expenses. So there was just a lot of mistakes I made, but I didn't have any guidance. And at that point, it was just about execution, taking action, and then asking questions later. And then the next BRRRR I did, the next year, I made less mistakes, which was good. I was like, okay, I'm not going to do that again. And then continued that pattern for 5 years, and to the point where I was like, hey, my real estate knowledge and the amount of mistakes that I've made could probably fill an encyclopedia. I could probably help other people that have goals that are looking at getting into investment real estate or are in investment real estate. Because at that point, I did everything myself, right? I would do a majority of the renovations for what I could do outside of the trades that needed to complete the permit. I would do the property management. I would do the tenant acquisition. I would do the property acquisition. And so I was self-taught in every single way. And so instead of having a team that really helped support me, it was kind of like myself that would learn how to do it and do it all. And when you do it consistently and obsessively for 5 years, you can gain a lot of stories. And so I was like, I'm going to use these stories and I'm going to get into real estate. And then I realized that there was groups that actually specialized in investment real estate, and that's what got me in. And that's what fast-tracked our success in the industry across Canada, working with so many different clients. Because now, got licensed in 2018 and have been working with, hundreds of clients every single year, and then grew Calvin Realty to the point where, I wasn't able to help all of the clients that were coming in, sellers, primary home buyers, investors through residential and commercial. And that's when the birth of Calvin Realty started, was back in 2020, I think it was 2011, actually, I think it was, at the end of 2011. And so that was the beginning. And it's been an amazing ride ever since. Met some amazing people like yourself, Steve. We've been working together now for the last, 6 months or so. Met you through Wealth Genius, I believe, if I remember correctly. I think it was
That's
Wealth
right,
Genius. Yeah. And it's amazing. And the best part about it is that the goals that I had for getting into fitness, of making an impact in someone's life for the better, being able to touch someone's life and positively impact it in some way, shape, or form, I was able to achieve through fitness, through helping weight loss, helping confidence, helping get the husband to feel attractive in front of his wife, get the kid to, achieve his high school football team, right? And now I'm just doing it on a different scale through real estate, right? Whether it's primary home selling and making a difference in someone's lives. That's what energizes me outside of my lovely espresso I have every morning.
Oh, that's awesome. That's awesome. That's quite a journey. So you've been doing this for a considerable amount of time. You've had a chance to weather a few market cycles. And what have you learned out of that? Were there any good and bad stories that came with that, personal or other? I mean, we're all about learning. You're talking about progress. One of the things I think that investors may fail to realize is what goes up might come down, and you need to prepare accordingly, and you need to actually try and understand that market far better than most people do. There's nothing like experience to help you learn that. Maybe you've got some stories or some experiences that came through.
Yes. And your listeners, half of you are going to listen and apply it. The other, I'm going to say, let's do it in thirds. A third of you know exactly what I'm talking about and have probably experienced it before. A third of you are going to listen and be like, hey, I'm never going to do that. Some of you have to experience the pain to be able to understand, the boundaries of the highway, and I see it like rumble strips, and you create boundaries of what you're willing to accept and what you're not willing to accept. And I think that kind of comes down to your buy box is, it's like this highway and you're headed in this direction. And I think with experience, it allows you not only to maintain clarity and focus, because there's so many other things that are happening around you. Think of it like Jurassic Park. You're driving down the road, you have Facebook, your friend just bought a 10-unit building, and then your other friend's doing rent to own with this, and then, your other friend put zero money down on this condo, and this, I forgot about the REITs, and what about all this private lending that's happening as well? There's a million different ways you can make money in real estate, and I think maintaining the clarity and focus based on what's going to help you get to your goals. Because every time you say yes to something, if it's not in alignment to your goals, you're saying no to one step closer to your goals. So just know that that's an important lesson that I've learned, is that if it doesn't align with your goals, if you say yes to it, that will take you one step back, because that's time that you could have spent towards whatever those goals are. So saying no more often is actually a bigger step towards your goal than you've ever thought before. And so some people will actually practice the art of no, because it'll limit the brakes. And so when you're going down this road and you create these boundaries for yourself, and a boundary for myself is I always have to purchase. I don't purchase outside of the locations that I'm confident in. And the confidence comes from the tenant profile and vacancy that I like to see even in the worst markets, because I know that no matter what, I can't change the location. I can change the paint. I can take a bedroom out and put an ensuite, but I'm very limited on what I can do to achieve certain results. And so part of my buy box that I've created, and I'm very limited on what I'm willing to look at, would be the locations. And one thing that we've created on the Calvin Realty site, because of how strongly I feel about locations, is a desirability map. And if you go to the investor section, you can click on there and you'll see that it goes through all the different areas of the city that are A, B, C, D. We even break it down to C plus, C minus. We go through tenant profile, vacancy, description. And even if you're looking for a primary home, like Gustavo from Trust Your Talent he's moving actually right away from Ontario to Alberta, and he was looking at it, and I mean, it's helpful because it'll show him which areas that his family could move into and what kind of infrastructure that he likes is around there to help introduce him to the city. So that's a really good tool. But location is probably one of the biggest lessons I've learned, where I have purchased 2 properties in locations that I shouldn't have, because the numbers looked good when all numbers looked good. And then when the market shifted on the rental side of things, I was having a hard time finding tenants that were favorable. I was having a hard time maintaining a low turnover, and it just created more phone calls. And certain times as an investor, you ask yourself, why the hell am I doing this? Like, why? It all seems to stack up to. When one thing goes wrong, it seems like 2 or 3 other ones. And then it's like, I just don't have the energy for this. I don't want to do it. But it's going back to the why. Like, why am I doing this? And maybe what I did was I created more work for myself. I got into a purchase that was outside of, maybe I should have listened to the rumble strips on the highway and didn't engage in that. And maybe I bought outside my buy box, and you'll pay the price every single time. So I would say that's one of the biggest, lessons that I've learned. And I mean, other than that, a big tip that I can give you that I've just happened to work out really well for me is with JV partnerships. When it comes to investing, a lot of us don't have an endless amount of capital in our bank account to just purchase. But, really being open and honest about what your goals are whenever you're looking at getting into anything real estate, I think is really important, from residential and commercial. I've been really lucky with the JV partners I've had. My mentality is always, let's hold on to the property forever. Technically, the goal is to hold on to it forever. My intention is not to sell in the next 20, 25, or 30 years. And then every 5 years, we will reanalyze where we're at and take the money from the accounts, whatever cash flow is available outside of all the capital expenditures and maintenance, and created these basic rules, and it's worked out really, really well. So I think having clarity on that has helped me significantly, where I know I hear a lot of really terrible stories about JV partnerships, promissory notes, and it just not being done right. And I think not having 2 people that are aligned. And there's nothing wrong with that. If someone has the capital and you don't align with them, it's better to not engage with them as easy it is to take the capital, because taking that capital can create way more headaches than that money will ever be worth. And I think that's one of the stories where you'll have to learn it by doing it and engaging in it. And Steve, I don't know if you've had that yet, where you've entered in a relationship and you kind of knew in the back of your head that it didn't quite fit what your goals were. And it's not like there weren't a bad person. But have you had that happen to you before?
Yes,
You had that?
yes.
Yeah.
I've had it on several occasions. It's actually probably about me. I'm not necessarily an easy person, very demanding, and so finding a partner that's aligned with my psychological type, my goals, etc. I've learned to make sure that we establish that up front in any of these partnerships, so that as we're in business, we don't have any surprises, right? We've already talked.
Hmm. Yeah.
Like I say,
Yeah.
I'm quite detail oriented sometimes, and quite long-term goal focused the other time. So I sort of have a split. I don't dive through all the detailed planning as much as I'd like to, but I like to partner with people that are interested in that too.
Definitely.
Yeah.
Yeah, if I can, and I know this is very raw and organic, but if I were to break down kind of the three biggest mistakes that I've seen most commonly at the highest frequency in real estate, it's purchasing outside your buy box, especially when it comes to location. It's not being aligned with your JV partner, and that there has to have conversations of like, if this like worst case scenario, what's going to happen? And then the third one is not being surrounded by an investor focused team to help support you and help you ask the questions that you're not asking, because believe it or not, everybody has a blind spot, and those blind spots could be terribly expensive, incredibly, they can derail the train very easily. And so when you have this strong team, they ask the questions, especially as you go through the due diligence, to make sure that you're not missing anything that they might be seeing. And that goes from like lawyer to accountant to handyman, property manager, any of your trades, could be the realtor. There's a series of different people that you can come across. And I can maybe use this as a plug for Recon, and one of the reasons why we host Recon, and we only bring the best of the best professional partners that can sponsor. And we ran out of sponsorships like 2 months in. Everybody from last year when we held Recon, everybody wanted to come back to Recon because of how much of a benefit it was for them professionally. And we were able to add a few more partners this year because we upsized it to the JW Marriott. But I think it's important to be in front of a room, and with Recon, it's not just, and again, I'm using it as a plug, but it's not just being in a room where it's just like whoever's willing to pay me can be a sponsor. It's like whoever we trust and whoever we've used before, and whoever I would actually recommend to, like, my own mother, my father, Amanda, that's who I want in the room, because it's an extension of myself and it's an extension of the brand. And so when you go to these events, you can come across some really solid people in this power team that will help support you massively. So you're not having to go through the yellow pages, go through the Facebook groups. Because if you go on the Facebook groups and you just say, hey, I'm looking for an electrician, you're going to get the guy's brother, you're going to get the uncle, you're going to get the guy that's like, hey, I can do it on the weekend, I'm not certified. You're just going to get an assortment, and you're going to learn through trial and error, right? And so that can be a very expensive timeline and experience as well.
It's so true, and I think that it's actually a real nice segue. Let's talk about teams. So, I mean, your new investor might go out and say, "I want to buy the property that I see listed here." Maybe it's an apartment building, and they go to a residential realtor, or somebody that's the realtor they bought their house from. There's a real difference in an investment focused realtor and your basic residential realtor. There's a different way to assess the value of the property, and a difference in the way that we need to manage the negotiation and the search for the right property, right? So I think it's one of the most important things that people need to realize is the need for that investor focused team. And like you say, it applies to all aspects, the lawyers, the realtors, the property managers, the support team in the trades, etc. Let's dive into that just a little bit more. So you chose to go in the investment realty area more than residential. How did you wind up there, and what do you think about what I just said about the differences?
I completely agree. And when it comes to the professionals, we still do a lot. Like, we do have primary home realtors on our team, and we do a lot of primary home. The majority of our listings are primary home. And then we also do luxury as well. But we do have the specialty of investment real estate. And the reason why I like the idea is it because it allowed me to be more of a surgeon of my craft. So even if I'm dealing with a primary home buyer, so Steve, say you're like, I want to move to Edmonton, and my goal is to be there. I want to upgrade in 5 years. Okay, this is my in-between home. I want to upgrade in 5 years. What's really important to me is that the home maintains its value. I want to be near infrastructure that's going to help support not only my lifestyle, but the value and consistent value of the home with, as many exit strategies as possible. If you told that to a residential realtor, I think some would understand, some would kind of get a good grasp, and I think other people, it may go over their head depending on how much training they've done, right? And so when you tell me something like that, I think actually, okay, so what kind of infrastructure is coming up that's going to positively influence that property in probably a better area that is, that's going to create more of a demand in 5 years? What kind of infrastructure is going to be done in less than 5 years that maybe we can time it, as close as we can. So then you even see a higher boost in appreciation, right, than you would in other surrounding areas. So naturally, I'd be thinking about that and how does it affect you? But then also, what are important things that most people look for in the property, right? If you're looking for a typical, bungalow home, I might encourage it to be a raised bungalow. So you have larger windows in the basement, 3 bedrooms up, 2 bedrooms down. I'd recommend a lot size of at least 640 square meters to give you more exit opportunities, because if you ever wanted to exit and sell it to a developer, or if you wanted to develop it in infill given how much densification that's happening in Edmonton right now to help support the growing population, the very, very fast growing population, that's a great exit strategy as well. And even being able to just understand who your end buyer is afterwards, right? And so we would go through a series of these different conversations from through the investor lens, even though your goal through purchasing is to help support your lifestyle and what your goals are right now, and not necessarily financial. Financial is something that is important to you in 5 years. So we want to make sure that you're going to be set up for success. And so that's where we can use some of our expertise in that understanding of like, what's the most desirable, what's the best exit strategies, the more the better. And then which area is going to be able to either accelerate when it comes to natural appreciation greater than the surrounding communities, or at least maintain strength. Because we know even, A and B areas tend to weather the storm better in fluctuating markets versus D and C areas, right? So those are little things that we can show you. And then you're like, okay, well, where are A and B areas? Okay, well, let's talk about those. We'll see where your price point can fit. And then also understand other kind of lifestyle goals you want, right? Steve, do you want to be near the river valley? Is there certain hobbies that you have? Where is your place of business? Are your kids going to school? Are you looking for particular schools? I can show you some schools that tend to be a little more sought after, where you have to purchase in the community. And then we also look at off-market properties, because in some cases, these desirable areas don't have a lot of listings. They don't have a lot of availability. So we'd also tap into our off-market database. We work with the most amount of wholesalers in the area that are boots on the ground, flyering these neighborhoods for us in effort to help get our clients, a home. And sometimes it's primary. We had a wholesaler yesterday that contacted me and said, hey, Calvin, I can't sell this property to my investor list. They're looking at about $750,000, but I know a primary home buyer would definitely purchase it and they would see it as a great deal. So guess what? So she sends me over their contact. I reach out to the seller directly, get more information, take photos, and then we can send it out to our internal database of clients as an off-market property that you're not going to be engaging in competition with other buyers, because it's not publicly advertised. So there's a significant amount of advantages. I could go on and on all day about this stuff, as you can tell. But I mean, I would rather be the surgeon and then practice in GP if I need to, rather than be a GP and then not know how to be a surgeon.
Yeah, there's a distinct difference. I think that I appreciate that, and I've seen it in action. So it's really cool to hear you talk about
Watch
it.
every primary home buyer now is going to be seeking out an investor-focused realtor just so they get the competitive edge. You're now changing it, and then all the residential realtors that don't understand investment real estate, they'll start listening to these podcasts. They'll start coming to the events and learning. And I encourage all the realtors to do it. Any realtors that are listening, do it. It'll benefit your business. The more you can invest in yourself, the more you can invest in other people, and the greater impact you can make.
Let's quickly go back to Recon. When is it? Where is it? How do people sign up?
September 6th and 7th. So they can sign up by going to the website, which is reiconference.ca. It is Alberta's largest investor conference. It's at the JW Marriott. And there's going to be a couple very large distinct differences between Recon and other conferences you've been to. You can't just pay to play. You have to be a trusted professional that we would use. And then we take a collaboration of top names in real estate and put them all under the same, So instead of it being like a specific Wealth Genius event, a RAIN event, a Trust Your Talent event, a Savvy Investors event, a Multifamily Makeover event, an REI Masters event, why not take them all, put them under the same roof. They can each tell their story, show them, show the audience what they're really excited about when it comes to real estate investing, because each group is going to have different specialties. Trust Your Talent might be more focused on like rent to own, lease option, and paper assets. Wealth Genius might be a little bit more on multifamily. Savvy might be multifamily, residential, and joint ventures. REI Masters might be focusing on more like residential, suited homes, right? And so it's nice because you can kind of see all the different flavors, and then you can engage in the tribe that is speaking to you, that you trust, but also where you feel like is the next step in your investment journey. And you can also stack them as well, where you can join 2 groups, you can join 3 groups, but at least it's an introduction, because these are people you're going to meet in the weekend. And what we think, one thing that makes us massively different, it's not an infomercial. It's not a gigantic infomercial where everybody's trying to sell you something. You have to provide good quality information. And that's one of the requirements, is like you actually have to give something away repeatedly throughout the weekend. And we went to the level of also getting a bunch of tools. So a lot of these top coaching organizations, they have some really good tools, like deal analyzer tools, right? Out like for location to, residential performas to convert commercial performas. There's so many layers of tools that we're going to be giving away, and it's going to fit for any kind of investor. I think we have infill tools that are going out. So if you're entertaining the idea of purchasing a lot, understanding the costs and even having a calculator of what it could cost you and how much profit, if there's any, available. So you're not running into a situation, because a lot of builders, they build and then just expect whatever price that they tack on after profit, someone will purchase. And then it's like, wake up call. No, you actually need to start with ARV and then work your way backwards. The amount of builders I'm working with, that I have worked with, that have done that, they will never do it again once we have that conversation. But these are tools that they should have. These are tools that investors should have, instead of always trying to Google, like, what's the latest tool for this? I need this. Like, these are things that will set you up for success. And so it goes back to where I started in fitness. It's like, how can I make the biggest impact as possible? Now I'm doing it at a larger scale, and I'm getting more people to help me do it.
Right on. That's going to be quite the event. I am looking forward to hearing more about it. Calvin, we're running close to the edge of the time. One of the questions I like to make sure we ask everybody, is all of my guests, I'd like to understand more about your why. What is it that motivates you? What are your goals that you're trying to achieve? And how are you going to know when you get there?
My why is, I feel like if I'm not utilizing my full potential to make as large of an impact as possible, I don't do well with that. I hold up myself to a very high standard, and every single year, if I don't hit a certain level of impact, and it has to be greater than the previous year, I don't feel proud of myself. And I always think of myself, if you were to be 85 years old in a hospital bed, and you were to look back, are you doing all the things that you should be doing? Are you stepping out of the box as much as you should be? And are you focusing on the things that really matter to you? Right. And so that's always one thing that I've used. And you can also do it reverse as well, as like, if you were 85 years old and you had one day to live in your body, what would you do? And so you can kind of reverse it, and I think it's a really good exercise. That's why I do it. I do it just to be able to make as much of an impact as possible. And I feel like if I'm not, it really affects like the self-esteem. It affects how I feel about myself entirely. And, I want to make an impact because I can. I have the ability to. And so I think there's nothing worse than, if you have the ability to, which everybody does, is to,
There we go. That ties right back into the beginning, progress. If there's one word that you try to embody
That's right.
in every facet of life, it's progress. I love it. Okay, Calvin, if somebody wants to reach you, how do they get you?
We're all over the social media. So Instagram, TikTok, Facebook, YouTube. You can also go to our website as well, calvinrealty.ca. I do encourage you to check out the desirability map. You can use this map. Now, this map isn't applicable in every single city, but it'll give you a good grasp of it. And then when you talk to an investor-focused real estate agent in whatever city across the world, you can apply A, B, C, D to help you understand which areas will help fit your investment goals and which areas certainly do not.
Awesome. It's been a true pleasure, Calvin. Anything we should have said that we didn't?
No, Steve, what's your why? You tell. You get to interview everybody else. You tell me what makes you tick. Why do you do this? Because I mean, you host an amazing podcast. You're an investor yourself. You're out in the events. You're in the platforms. You're doing amazing things. I genuinely want to know as well, is like what makes you want to do it?
You know what? And I don't have this in a clear sentence, but I mean, ultimately, my why, it's all about trying to actually change the future. I can't leave my future to chance and my family's future to chance. I'm in a position right now where, I've had a full career. I've enjoyed life to the fullest. but I'm also a third-time lucky husband, and with that comes a few financial resets. So now I'm actually transitioning into a professional real estate investor for phase two of the journey to try and make sure that I can sustain the life that I want, to make sure that I'm able to help others grow and understand the benefits that are possible in real estate. I've met so many people since mentioning this that are coming from a similar place, and they're finding themselves, you look on the streets, like you mentioned, the homeless that's increasing, et cetera. Well, a lot of those people are folks that are entering into their senior years and all of a sudden discovering they can't afford to live somewhere. It's not necessarily an addiction or a crime that's driving them there. It's actual, they can't afford the home that they used to have. I want to help people actually realize how to put some focus in on their investment right now so that they've got passive income to sustain them through the futures. That's what I'm trying to bring to everybody as well. Recognize the opportunity, let's grab it, and let's go.
I think that's amazing. You're doing amazing things. Keep it up. You're an amazing individual. And if this is the first episode you've listened to, you want to continue to tune in because Steve, you have an amazing journey, and I'm excited to see what the next steps look like for you.
So grateful. Thank you so much, Calvin. It's been a real pleasure. I need to go to work. I'm going to let you go. You, my friend, have a great day.
Yes, you as well. Enjoy work today.
Thanks for being able to adjust your schedule so you could make this work. Appreciate it.
Thank you for the invitation.
Okay.
Absolutely.
I'll talk to you later. Thanks.
All right, my friend.
Bye-bye.